In this video, as part of the Candlestick School series, guys, we're going to look at the 3 white soldiers pattern, some of the pitfalls and some of the powerful ways we can use it. Stay tuned. Hey traders and investors, a very warm welcome to you. Welcome back if you are. Subscribe if you're new here. A warm welcome. Right, okay, so 3 white soldiers. Sounds a bit of a silly name, but you know what? People seem to make silly names for these candlestick patterns, don't they? Abandoned baby, all this kind of stuff. But let's have a look at it. The point is, who cares what the name is? If we can make some money out of it, that is all I care about. And I guess that's all you care about. Right, so what we have is, it's a bullish candlestick pattern. It works well on a daily. I'm going to talk about time frames a little bit more in a second. It works well on a daily, works well on a kind of 60-15, but we'll address that in a second. There's some things I want to mention. But first of all, let's look at the pattern. It is basically as you would expect it. It's 3 good, solid candles. And it's called white because, you know, some people have black and white on their candles. Most people have red and green. Well, it doesn't matter what the color is. The point is it's 3 bullish, strong candles. You've literally got, you know, high to low, good strong bodies. Yes, you can have some tails, some wicks. I wouldn't want too much of a kind of wick to the upside, but actually it doesn't matter too much as long as you've got the 3 days. It's a 3-day period you're looking at, really. One individual candle isn't going to upset the apple cart too much. If they're all a bit grubby and they're all kind of little tiny candles, it's probably not going to be a thing. You really want that momentum. It's like day 1, day 2, day 3. 3 solid days of commitment from the buyers. The supply-demand imbalance has shifted. We've got a lot of demand coming in. It's consistent, it's solid, and it's there for 3 days. That's the kind of crux of the trade. That's the thesis of the trade. It's a bullish trade. We're looking to go long. Right, now there's lots of pitfalls with this. It can be very, very powerful, but there are a lot of pitfalls. Now, so that's basically the basic pattern. Okay, we've got 3 solid days of up move. Now, a lot of candlestick patterns are used in the conditions that the pattern is kind of got an affinity for. In other words, if we're in a bullish environment, many of these bullish candlestick patterns, like the bullish engulfing, work best. It's like a bullish engulfing candlestick pattern works best on a pullback in a bullish environment. However, this one, in my opinion, and others may disagree with me, but in my experience, this works best as a trend reversal tool. Not many candlestick patterns can say I'm a trend reversal tool, but this works best, I believe, to signify a potential end of a bigger trend, which is super powerful if you think about it. You know, you don't get them very often, but if you're kind of aware of them and you're kind of looking out for them and you see them at the end of a trend, sometimes the risk reward ratio is well worth a shot, because you're thinking, you know, this could be a multi-month move, multi-quarter move for me. You know, I've seen the conditions are right. Let me have a go. Stop's going to be wide. We'll mention that in a second. The stop's going to be wide, but you know, the risk reward ratio is huge. It's huge. Okay, as opposed to taking it in bullish conditions. And what I'm going to do is I'm going to put some examples up now for you guys. I'm going to put a really good example. I'm going to put examples that are really good technically, but in the conditions you can see why some of the pitfalls and why you got to be careful of this one. Okay, so this is a good example here. United States Steel, ticker code X, daily chart. Again, we'll talk about time frame in a second. It's a daily chart. You've got a downtrend here, gone from $48 to kind of $22. You really had a massive haircut, a 50% plus haircut on the stock. Then we see down here these 3 white soldiers. So we see good solid move. We have a little gap lower. You have a little gap lower, a little drive lower, and then a close at highs, which is good. Don't take out the prior day, so it's not bullish engulfing. Then we get day 2, then we get day 3. So we've got a nice 3-day move. Now, okay, we only take out 2 of the prior days high, fine. I would prefer to see more strength than taking out perhaps, you know, multiple days or multiple weeks of the high. But this is a good indicator that, you know, maybe there's some strength down here. You're not always going to get it, and like I say, the risk reward ratio on this is good. The probability is you reduce a little bit of probability of success, but the point is, if you get on the end of it, you know, you're on for a big one. So the theory is, once you see this pattern, you're going to go long at the close of day 3. So you get your 1 day, your 2 day, you're looking for your 3rd day, and actually it's a good way of kind of just digressing slightly, guys. It's a good way of being alerted to it. If you're charting package, you say, hey, listen, I just want to see 2 green candles, and then on the 3rd candle you're kind of watching it and you've got those in your watch list, so you can be prepared to go long at the close. That will give you a good idea, or kind of give you a good heads up of something that's happening. So again, long at the close, And really, because this is a high risk reward trade and something that's for a longer period, your stop is going to be below the low. And some of you are going, oh gosh, that's quite wide. It is, but this is a trade for you swing traders who want to see that multi-week move, that strong move, the end of a trend. You can adjust it to suit, and we'll talk about it in a second with the time frames, but let's talk about this for now. So you're going long at the close here with 23.11. Your stop's going to be down here at 18.85. It's a wide stop, agreed. But you know what? If you think United States Steel has bottomed out here, you're looking for a $40 target. You're looking for $45, $50, whatever it is, over multiple days, weeks. And in this case, you did get a push up. We've got a kind of decent, but a 50% move up, going from $20 to whatever, $22 to $30, almost 50% move before it retraced. Fine, whatever. Maybe you've been stopped out if you were holding that for a long period of time, but I'm sure many of you would have taken some off the table. The point is, it did change sentiment briefly. Well, I say briefly, it was kind of 4 or 5 months. It changed the sentiment. It stalled that downtrend. It was the end of the downtrend, and we had a miniature uptrend. To be honest, there's more than enough meat on that, to take some off the table, regardless of your kind of thesis on that, I think. So that's one. Another example here on the same stock, guys, is here. We have a similar thing, but this is, it actually highlights the danger of this. And I've also got another one for you on Bitcoin, which we'll look at in a second. Very similar kind of conditions. The danger you've got when taking these 3 white soldiers is that you're chasing a bit. 3 days of move, most of the time that's stretched. 3 solid days of green. Most of the time, that's stretched. And I wouldn't argue if you said to me, hey, you know what? That's too much. I want to see it as a filter, and then my trigger is going to be maybe a pullback and a reversal. I want to add some other criteria into that, and I would say, you know what, I think that's pretty sensible, because 3 days of solid move is going to make you very, very stretched. Your oscillators are going to be stretched. You're probably going to be pushing into overbought territory, the shorter term ones, the rate of change stuff, all that kind of thing. And I get why you'd feel uncomfortable chasing it. Same for me. But if you're in the lows, and it kind of like that previous example, it feels a little bit more comfortable. If you're here and you're kind of saying, well, actually, it was 24 when we first got it. Now it's 26.50, 26.40. It's a little bit stretched. I can see why you'd want to kind of take something else after. But the point is, this one, guys, I'm literally highlighting the pattern. This isn't as powerful, but I still think it's got the criteria. 1, 2, 3 solid days. Buying it on the close at 26.18, and you've got a couple of dollars of meat before it retraces back and undoes all the good work. There are going to be times when you get a massive move from this, and that's what you're playing for. You're not really playing for a scalp, because you're already chasing it a little bit. You've got to have a wide stop to accommodate that chase, but the point is, you're kind of on it because you think, hey, you know what, this thing's going to roll, this thing's going to just fly. A couple of examples of Bitcoin, and great examples to sort of see that momentum, and we know Bitcoin, a lot of the cryptos had that aggressive momentum. So even in that time period, you've got to be careful, and this is why you got your 3 white soldiers here. Good, solid. These are textbook, by the way. If you wanted something that was just the textbook to print out and look at, these are textbook. Maybe that could be a higher body if I'm being pedantic and being picky, but that's what you want. You want that kind of stagnation, 1, 2, 3 days, and the idea is you're going long at the close. You're going long here at 4,055. Your stop is going to be here at 3,400. It's a wide stop, but guys, this was Bitcoin. We know it's a wide stop. There's your trade. In this case, like I say, because you're chasing, you've got to be careful. You've got a bit of meat in that. We've got $800 meat. It's not good enough risk reward. You probably would have been stopped out on that before it continued through to highs. But this thing was a volatile beast. Another one here. 3 solid ones. Again, you're going long at highs. Your stop's below the low here at 8,200. You're going long at 9,700, and obviously this thing ends up doubling. It's a rare market. Bitcoin was. The cryptos were rare. But the point is, okay, being cautious that you're not chasing. Under most conditions, you've had a big drive up, and then you see those 3 moves. Like if you're just looking at this chart here and saying, hey, we've gone from 2,000 to 8,000, and we've seen then the 3 white soldiers. Most traders are going to be like, okay, I need to be very, very careful here that I'm not kind of really chasing this. I'm really getting carried away with it, and say adding another layer to get into the trade. The point is, it's very, very useful. I think it's more useful for me on reversal. So we have that downtrend. So pretty opposite to what I've said with other candlestick patterns. I prefer to see it like this. Down move, there's your 1, there's your 2, there's your 3. Take your long, have your stop here. Look, assess how far this thing has come, assess what level we're at. Maybe we've tagged that low before. Maybe we've had some other criteria that suggest that might be a low. Then you see some strength coming in. Then you feel a bit more comfortable buying because you're not chasing so much because you're where you were maybe a week ago. So you don't feel like, hey, like on this Bitcoin, it's been ripping. And I know that people were rewarded for chasing, but most times you will not get rewarded for chasing. So this is my preferred environment for it. I prefer to see it when we have it off the low, strength off a low. Going into time frames now quickly, it works well as a day trader. If you're using a 3-minute, 5-minute, this works beautifully, especially in that condition. Drive lower, you've kind of done a lot of work to the downside, the ATR is stretched, maybe you've taken out some support levels, you know, everyone's kind of gone all bearish on it, then all of a sudden you get bang, 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 3 solid greens. You're likely going to unwind and retrace back to a VWAP or a moving average or something. It's a good mean reversion type trade. Whether you're going to kind of undo everything and change the sentiment of the market entirely like you might do on a daily chart is up for question. I wouldn't personally do that. I'd look for that mean reversion back to, like I say, a VWAP or a midpoint or a pivot point or a close or a gap or something like that. I wouldn't be so aggressive looking for ultimate highs. Maybe I'd trail some, but really the thesis of that is, hey, we've got change in sentiment. We've had 15 minutes of aggressive moves, so 3 5-minute candles. You're going to see a large 15 minute if you're looking at 15-minute or 3 minutes, whatever it may be. Going long, stop below that low. You've been looking for it for a while. You've been looking for a reversal. There's the trigger you need to pull to kind of get the trade going. So anyway, guys, that's the 3 white soldiers trade. It's powerful in the right conditions. I think it's better when you're looking for a bigger trend reversal. You've got to prepare to be stopped out on this. You've got to have a decent wide stop. So of course your position size is going to be a lot lower. But if you get on the right end of one, then this thing could run for a good chunk of time, giving you a decent risk reward ratio, making up for the fact that probability of success is a little bit lower. All right, guys, if you like this kind of stuff, give it a thumbs up. Much appreciated. Thank you. Bye bye.